All right, let's dive right in. Today we're looking at Vertex Pharmaceuticals, and man, their latest earnings call was a real head-scratcher. The company posted great numbers, beat expectations, and the stock dropped. So what on earth did the market see that the headlines missed? We're going to break it all down.
Yeah, that's the big question, right? You see a double beat. Revenue's up, earnings are up, and you'd expect the stock to pop. But instead, it sold off in after-hours trading. So what spooked investors? Let's get into it.
Okay, so first things first, let's look at the numbers that made this whole thing so confusing. Because on paper, everything looked fantastic.
And here they are. It's a classic double beat. Revenue came in at $3.08 billion, just edging out what the analysts were looking for. And the earnings per share, or EPS, a solid beat at $4.80 versus the expected $4.57. Now we're looking at the non-GAAP number here, which basically just strips out some one-off expenses to give you a cleaner look at how the core business is really doing. By any normal measure, this was a great quarter.
And we're not just talking about a tiny beat here. This was a beat on top of some really strong growth. That $3.08 billion in revenue, that's up 11% from the same time last year. It tells you the core business is absolutely humming along. So, what's driving that growth? Well, it's their cash cow, the cystic fibrosis franchise. It is just a dominant force. Management spent a lot of time on the call talking about its strong performance, especially with their newer once-a-day drug, Alyftrek, which is really taking off. So far, so good, right? Sounds like a home run.
Okay, so if the current business is so strong, why the sell-off? This is where the story gets a little more complicated. You see, the market wasn't really reacting to today's numbers. It was reacting to what it saw coming down the road.
And this slide really lays it out perfectly. It's like a tug-of-war happening inside the company's story right now. In one corner, you've got this unbelievably strong CF business just printing cash. But in the other corner, you have this growing list of worries. Operating expenses are climbing, the new product launches are a bit slow out of the gate, and then there was that recent setback where they had to halt their pain drug, VX-993. That's a lot of uncertainty.
And this is the slide that really tells the tale. It's all in the guidance for the rest of the year. Yeah, they nudged up the low end of their revenue forecast, which is good, but, and this is a big but, they also raised their forecast for operating expenses. And that's what Wall Street jumped on. They see the costs going up faster than they'd like, and that's what pulled the trigger on the sell-off.
You know, this quote just nails it. For so long, the Vertex story was simple. CF dominance. That's all you needed to know. But now it's a much more complex story about trying to grow beyond CF. And investors are basically saying, show me the money. They want proof that all the spending on new ventures is actually going to work.
And what are those new ventures? Well, you've got CASGEVY, their gene therapy. It's getting traction, for sure, but the logistics of it make the rollout pretty slow and gradual. Then there's Journavx for pain. Over 300,000 prescriptions is not nothing, but it takes a huge amount of cash for sales and marketing to get it off the ground. And finally, povetacicept for kidney disease, a super exciting drug in the pipeline, but right now, it's all R&D cost, zero revenue.
All right, so let's put it all together. What's our take on Vertex as we look ahead to the next quarter?
We're slapping a market perform rating on the stock. Now, what does that mean? It's not a sell, definitely not, but we just don't see a clear reason for it to dramatically outperform the market in the short term.
And here's the justification. The bull case is super simple. That cystic fibrosis business is a fortress. It's a cash flow engine that provides a stable floor that most biotechs can only dream of. But the bear case? Well, it's getting louder. It's all about those rising costs, the risk that these new launches don't go perfectly, and the recent pipeline stumbles. So our verdict is that the stock is probably going to be stuck in a range, kind of trading sideways until one of these new drugs really proves it can be the next big thing.
So, what should you be looking for next quarter? When they report again, what are the key things to watch?
It really comes down to three things. Number one, the prescription numbers for CASGEVY and Journavx. Are they starting to ramp up faster? Number two, any news on povetacicept. If we get an update that moves its timeline forward, that would be a huge positive. And finally, and this might be the most important one, any commentary on the expense outlook for 2026. The market is going to be listening with a microscope to see if this big spending is going to continue.
Okay, and before we wrap, here's a little something for the more advanced investors out there, a potential trade idea. It's called a pairs trade. The logic is to bet on Vertex being more stable than its peers. So you'd go long VRTX stock, you buy it, while at the same time shorting a broad biotech ETF, something like IBB. By shorting, you're betting that the fund's price will go down. What this does, or what it tries to do, is isolate that super stable CF franchise from all the crazy volatility you see in the rest of the biotech world.
So to wrap this all up, Vertex is really a tale of two companies right now. You've got this incredibly profitable, stable core business, and that business is funding a very expensive and still pretty uncertain future. The market is just sitting on the sidelines, waiting for proof that the big bet is going to pay off.
And of course, just a reminder for everyone, this is purely for informational purposes. This is not financial advice. You should always do your own homework before making any investment decisions.